I would like to talk about the regulatory challenges of investing in penny stocks, the regulatory challenges of penny stock investing, what all investors need to understand. Penny stocks typically price below $5 per share presents unique regulatory challenges for investors. While offering high reward potential, they also carry significant risk due to volatility and susceptibility to manipulation. So here are key regulatory challenges to consider when investing in penny stocks. Number one is limited oversight and transparency. Limited oversight and transparency. And many penny stocks are issued by smaller companies with less regulatory oversight. Stocks traded on platforms like over-the-counter. Over-the-counter market often have fewer reporting requirements than those listed in major exchanges like the New York Stock Exchange. And this lack of transparency makes it harder for investors to access reliable information that will help them make well-informed investment decisions as it relates to their investment in penny stocks. Before then, let's look at the solution that we could adopt in these regards. So we focus on penny stocks that have filed report with SEC and provide transparent financial data. Instead of avoiding penny stocks completely, you check their SEC filings and see how regular they've been filing their reports, how transparent they are, and you look at their financial reports critically. Number two is less stringent reporting requirements. Less stringent reporting requirements. Penny stocks, especially those listed on over-the-counter markets, often face less stringent reporting requirements than those stocks that are listed on major exchanges. This makes it more difficult for investors to obtain accurate financial information. And so what is the relevant solution here? Invest in stocks that regularly file SEC reports, ensuring access to important disclosure like financial statements and quarterly reports. Number three is vulnerability to fraud and market manipulation. And these stocks are quite vulnerable to fraudulent activities and market manipulation. So penny stocks are especially vulnerable to fraud, including pump and dump schemes. So in these scams, fraudsters inflate the stock price using misleading information before selling off their shares, causing the price to crash. And so what solution do we adopt here? Be cautious of unsolicited stock tips and unusual promotional activity. Always verify stock information from regulatory sources. Number four is lack of liquidity. Lack of liquidity is a very important challenge of penny stock investing. Many penny stocks suffer from low trading volumes, meaning they lack liquidity in essence. This can make it difficult to sell shares without affecting the stock price, particularly if you are selling or buying in large volume. So what's the solution here? Avoid stocks with low trading volumes or wide bid-ask spread. Ensure the stock has adequate liquidity before investing. That's what you consider first. How liquid is this stock? before you go ahead to invest in them. Number 5 is OTC, that's over-the-counter market and the regulatory challenges. Over-the-counter markets and their regulatory challenges. Penny stocks are often traded on over-the-counter platforms like over-the-counter bulletin boards or pink sheets, which have lower listing standards. This platform offer fewer investor protections and lower regulatory oversights. So what's the solution here? So prefer stock listed on the over-the-counter bulletin board or those that comply with SEC requirements for greater investor protection. Number 6 is risk of insider trading. Risk of insider trading. Small penny stocks companies may have less internal control, making them more susceptible to insider trading. So executives or major shareholders could exploit non-public information for personal gain. It's always that particular tendency towards insider trading. And so what solution can we apply here? Research the company's management and check for any suspicious insider trading activity or unusual transactions. Please like this video and subscribe to this channel if you've not done that. Number 7 is in the role of market makers and manipulation. The role of market makers and manipulation. Market makers who facilitate buying and selling penny stocks can manipulate stock prices by controlling supply and demand. This can distort stock prices, exposing investors to greater risk. Well, it may or may not be so because market makers are highly regulated. So what's the solution here? Be cautious of penny stocks with erratic price movements and low trading volumes, which may indicate manipulation. Number 8 is SEC enforcement and legal recourse. SEC enforcement and legal recourse. So although the SEC works to prevent fraud, its resources are limited, and monitoring a small penny stock is challenging. Some companies may go unnoticed until it is too late for investors. So in this case, you need to stay informed about SEC actions and legal rulings concerning penny stocks. If necessary, consult a financial advisor or a legal expert before investing. Number 3 is a risk of delisting. Risk of delisting. Penny stocks that fail to meet the requirement for listing on major exchanges may be delisted, typically moving to over-the-counter market. This can drastically reduce stock value and liquidity. And what's the solution we could adopt here? So keep track of a company's financial health and compliance status to avoid investing in stocks that are at risk of getting delisted from the exchange. Number 10 is unclear regulatory standards for foreign penny stocks. Unclear regulatory standards for foreign penny stocks. Penny stocks traded on international exchanges may be subject to different regulatory standards, adding complexity for U.S. investors. This increases the risks of regulatory discrepancies or lack of transparency. So in this case, invest in U.S. regulated penny stocks or ensure foreign stocks adhere to clear and trustworthy reporting standards. So in conclusion, investing in penny stocks presents regulatory challenges, including limited transparency, fraud risk, as well as market manipulation. market manipulation.